We've had positive Bitcoin movements, but have been overshadowed by US and Iranian conflict. Seems to be suiting the US, but is it sustainable amongst its allies? General update for the 17th of March, 2026. Sentiment has reset, the system has deleveraged. That is a possible bull case. The business cycle is beginning to pop up Bitcoin, and we've had some positive ISM prints, but I think Iran might be making that unsustainable. We remain undervalued to the stock to flow, which is true, and I'm very keen to see if this cycle validates the stock to flow. My thinking is this is beginning to look invalidated. Now, the bearish case. So the 4-year cycle is not broken, which for now appears to be the case. We are following the 2021 and 2022 bear market perfectly with just this little touch of divergence that I'm going to show you now. And the Iranian conflict works for the US, but I'm thinking it's hurting the US's allies, and that may make it unsustainable. Is there going to be a bull trap? If you've been following my channel, we've been looking at this chart quite a bit for the last few months as Bitcoin crashed down just like it did here after bouncing off the 100-week moving average, which it did here. And we are currently having this downward trend in line with this downward trend from 2021, 2022. And what we have is this channel that I said that we would travel through for the next couple months, just like we did in the bear market in 2022, which we're doing right now. And I said, hey, look, we might break through this resistance line or break down below the support line and see what happens. If we break down below, then we're going to have this secondary capitulation, which will mark the sort of the worst of the bear market. It won't be the low, but it will be sort of the most violent move that we have. And right now, we have broken up above this resistance line. We're at 74,700 on the back of this Iranian conflict, which kicked off basically the same time we went bullish in Bitcoin, which is interesting. So what are the implications for this on Bitcoin, and why do we feel that we might be seeing early divergence away from the 2021-2022 capitulation event and into potentially some positive territory? I introduced this macro chart last time, and there's been a couple little things that are registering to me as interesting. So obviously we've had the Dixie move up. Dixie has strengthened, a bit of a flight to safety on the back of this US invasion of Iran. People want to chuck their money into the US dollar, which is good. We've also seen an increase in uncertainty with copper coming down and gold going down, but the copper to gold ratio remaining strong, indicating a feeling of uncertainty, while US bonds interest rates have increased just very slightly on the back of this Iranian conflict since late Feb, early March. But what is interesting is while this is not really seeming to hurt the US at all, you know, the US is a strong net oil exporter. If we look amongst the US allies, they're having a tougher time. So what we have here on this chart is government bonds of your typical US allies. We've got New Zealand, Australia, Germany, the US itself, Canada, Norway, United Kingdom, and France. Now, there's an interesting little divide here. Now, these 5 countries, New Zealand, Australia, Germany, France, and United Kingdom, are dependent on oil imports. They import the majority of their oil, and we have the US, Canada, and Norway being a bit more resilient, being net oil exporters. And what we can see is a very, very different response in their bond markets. You can see the US government has had a bit of a blip up over the last 18 months in response to the Iranian conflict. We've had Canada have a little bit of a blip up, and we've had Norway blip up a bit, but it seems to be stabilizing on the back of the fact that the oil prices will be working quite favorably to them. Whereas if we contrast these 3 to Germany, Australia, New Zealand, France, and United Kingdom, they've had much stronger adverse moves in their bond markets in response to the Iranian conflict. Oh, sorry, not Norway, but these 5, because they import their oil. And these are all important allies to the United States, and they're going to find financing the Iranian conflict over the long run very, very difficult as their fuel import bill rises substantially. So if we come back to 2025 and 2026 and we ask ourselves, well, what does this, Iranian conflict mean for Bitcoin? In my opinion, it's been viewed reasonably favorably for the United States so far. It hasn't really caused any fiscal issues. It's a bit of, stimulatory spend with military spending, which is potentially coming up and finding itself in Bitcoin. It will also be, productive spending in the sense that manufacturing production will come in and that will probably flow into Bitcoin. Not necessarily productive in the sense that war is productive. I don't think that is true, but production will increase to satisfy the war demand. And what we will have is potentially a diversion away from this, or a weakening of this bearish movement that we're going to monitor. And if we break down below, then that's the case remains on. But so far, it's looking pretty good. And I'd say that we're starting to get overdue for this. I was expecting it to sort of kick off in early March. We're now sort of mid-March. So things could, I think, diverge here if the Iranian conflict lasts longer. Whereas I think the only unsustainable thing about the Iranian conflict is, the allies that surround the United States are going to have trouble paying for this and keeping it ongoing. And so I'm looking to see how that evolves over the next week or two. Either way, the Mangosteen framework has performed really, really well. We went bullish here in the 24th of February, 2026. And we have climbed up, and I think we entered at around 65K, and now we're sort of kicking around the 74K. So things are looking pretty good. I'm really, really confident and really, really happy with how my approach has been performing so far. So I'm happy about that. Again, Microstrategy, we've had us click into MSTY again on the back of the strong Bitcoin price movements, which have pushed Microstrategy up a little bit and kept MSTY above water while introduced a little bit of weakness for winter. And the approach has picked that up and flicked us into MSTY at the right time. So really, really happy about that. And the latest version of the Mangosteen MSTY MicroStrategy winter approach is doing really well, and I'm super stoked. If you're wondering who I am just a humble Mangosteen with a background in finance, economics, accounting, and engineering, and professional experience across corporate strategy, finance, including time as head of investment and treasury for a multi-billion-dollar corporate. And I want to cultivate the next generation of active investors from suits to steel caps to renegade financial education and strategy. If you've liked what you've seen here and you think the tools that I'm using are really, really powerful, which I obviously believe that they are, you can acquire a 2-year license at the moment through Mangosteen Private. Check out my website, mangosteen.global. There's a 5% discount when you pay in Bitcoin, and there is obviously a 14-day no questions asked refund policy. So if you buy it and you decide it's not for you, then feel free to email me and I will refund you, no worries. And disclaimer, this channel does not provide financial advice or any advice of any kind. Everything is for general information and entertainment purposes only. It does not consider your personal objectives, financial situations, or needs. Reference to any financial products factual only and do not constitute recommendations. You must do your own research. Any investment or trading decisions you make are entirely your own. This is entertainment only. You are listening to a random Mangosteen on the internet.